Hey legends, it's Kieran. In this session, I'm going to discuss key trading issues and ways to really journal to prevent them. So, without further ado, there's certain key trading issues that often are the root of all things. And the first one is, of course, fear of missing moves. And where does this one stem from? And ultimately, I believe that it stems from the fact that of having a low account size. But be reassured that there's ways to get scaling up. And the main process, the important thing is being consistent every month whilst following the risk management rules I've explained elsewhere. And if you're consistent in a small account, you'll be consistent in a much larger account. And if you're consistent, the money will just be attracted to you. And so I think that really does pretty much give rise to this root fear of missing moves. And ultimately, this is a business. You're rewarded based on the quality of the setups you take, not for taking every single trade. The next key thing is the fear of failure. The thing about this is, naturally the rewards are quite lucrative. You're aiming for big things. And when you start, there's a natural learning curve. There's a natural price cost of learning. And if you have small drawdowns, and if you're not able to deal with that, then perhaps trading just isn't for you. And so some degree of drawdown and some losses is normal in some stage. And the key is obviously not risking too much when you're starting. Perhaps take your total capital, maybe put 90% away and maybe deal with 10%. Or maybe just open a small amount of money that you're willing to lose. Because you want to make the actual learning process as cheap as possible. And this is actually one of my biggest regrets. Number 3. So impatience sitting out. And again, this is to do with discipline. And a good way to combat this is having other stuff to do. Do not make trading the center of your life, because ultimately you want to have things to take the stress off. Also, it's good to have perhaps a demo account, just a mess up account where you can just open up high leverage positions, because it's just for a bit of fun, because some of the people actually genuinely have a dopamine fix in entering trades. And if you're not able to deal with that, then this is the way you can combat it. But ultimately, discipline is very much required as a trader. And sometimes you might have a lot of trades in one day, but on other occasions, you might only have one trade every 3 weeks. And there's actual recent price action, I found that. And so sometimes you have to switch to a different asset in that time period, or you just have to sit out. Next key mistake. Over-risking after a losing streak. And this is, in some ways, a human nature. It's not a mistake as such. We all have to go through it. But the thing is that risk management is so essential. And you need to have a system in place. So for example, if I have 3 consecutive losses in a day, not that I trade that much, but before when I'd stopped trading if I had 3 consecutive losses in a day. And that was just a way to regulate myself so I don't just revenge trade based on losses. Because you can actually blow up your account in a single day purely because of revenge tactics. And you have to really appreciate that psychology is such an important aspect of trading. And over-risking is that mentality of making it back. But the reality is the market does not care about you. The market is ruthless. And this is something to really consider as well. You need to have mechanisms how, if you're able to take that loss into a winner, that's just amazing. For example, if you make a loss, write down 3 steps you're going to take in your actual action plan so that you never make the same mistakes again. Because trust me, when you have losses and when you have wins, sometimes when you have a loss, you think you'll learn from the mistake because the loss is so big. But in 2, 3, 4 months, you'll actually forget about it when the market conditions change. And this is the way you actually condition yourself to stop making the same mistakes. Because at the end of the day, we're all only human. Next one, not following a system. The question you need to ask yourself is, did I win this trade because I did the right thing or because I got lucky? And if you constantly find that it's because you got lucky, over the long period of time, it's very difficult to replicate that. And so about having a system, an automated system where you can essentially automate the process and follow the same set of rules over and over again. And this is essential because there's so many factors that come in, for example, the news, external stuff, and being able to have sometimes a rule-based system that you're able to stick to is very important. And naturally, chasing pumps as well. I just don't understand this. So sometimes, for example, if you look at certain charts, very often if you look at charts, you'll see a list of altcoins, 10 list of altcoins, 10 different assets, and people see that there's a pump. And then, say an altcoin or an asset has gone up by 40%. People then go into that asset, and the previous asset they were watching them bumps, then they jump to that one, and the next one jumps, they jump to that one, and so it's just chasing. And if you keep chasing, then naturally it's a recipe for disaster. because very often you've already missed a major part of the move. And even if a pump has happened, a substantial pump, you're putting yourself in the worst possible risk-reward situation. Because obviously the risk significantly increases as the pump has happened, because your actual reward is kind of diminished. So that's just something to consider as well. And again, this ties with discipline. Discipline is so important. So now I'm going to discuss certain tips to really make journaling effective. It's interesting, I asked people, what do you think is the most important book in trading? And everybody usually says a book like Trading the Zone by Mark Douglas. And whilst that is an interesting book, it's mostly a psychology book. But the real answer is, drumroll please, the most important book in trading, in my opinion, is no book. It's mostly your journal. Because your journal is specific to you. Because the best teacher is experience, and if you have some baseline rules, and if you're able to journal each time based on the market condition, for example, a ranging market or trending market, and if you're able to really hone in on the details, finding out, was it particularly the time I traded? Was it my entry? Was it my stop loss? And really isolate the issue, you're able to really replicate the process, and it's just a lot better for results as well. And I think, of course, for journaling, definitely a daily and weekly logs is very important, because it enables you to recollect the lessons from the daily and add it to the weekly. And on Sunday, it's just maybe 30-40 minutes just reviewing the results and performance and implementing changes for the next week. And this process is just crucial. This sense of self-reflection is very important, because I see a lot of new traders, particularly in the Discord and all, they're joining, and they see a lot of trade ideas and setups being placed. And it can be quite overwhelming. But this is the thing, you need to be able to essentially see what everyone is posting and then essentially isolate, okay, so I'm looking at this idea, I'm looking at this volume strategy, I'm looking at this fixed range strategy, I'm looking at this trend line strategy, or Bollinger Band strategy, whatever strategy you use, and then you need to be able to actually take some time out and be able to reflect on it and see if it suits your trading style and really hone in on the details, because this self-reflective period is very important as a trader, and sometimes it can be quite lonely, but this is a natural, actual learning curve you need to go through. Next thing is to find details of the trades. For example, the entry, the exit, the time, the stop loss position. Sometimes I found that initially I was losing trades because my stop loss is too strict and too actual tight, and often there'll be stop hunts, and so I adjusted it. And so this is an example of how you have to really adapt yourself. And you can also type in, okay, did you go long or short? You might find out certain things, perhaps the highs and lows of the week or on average put in a certain time. Okay, this is also things to consider. And again, active reflection is just such an important aspect. It's so much better than any book, and it's essentially, looking at your entry, exits, and all the criteria, and see what you could do differently for next time, and really review it. Because the thing is, you need to review it regularly to actually stop making the same mistakes. And the thing is, if you do something well, for example, not placing trades, then that's completely fine. You should actually, in your journal or reflective piece, you should actually write down, I'm really proud of myself. I didn't trade when there was nothing going on in the market, and I avoided placing pointless trades. You have to really complement your positive habits as well. And don't be too negative for losses, but at the same time, you don't want to sugarcoat things, because you want to be able to remember the mistakes for the next time, a couple of months later. Because you have to appreciate a year later, you might forget all this, and so it doesn't matter how big the loss is, you need to write it down and be able to review it and make it part of your actual algorithm. Yeah, but guys, in summary, thanks for watching, and I hope I've really given you a list of really common trading mistakes. And if you actually take on board these messages, you can actually substantially skyrocket your trading results, and hope the journaling tips have also been helpful as well. But guys, thanks a lot for watching. Do check out my YouTube channel, which I set up quite recently. This is where I post my passion for crypto and trading, and tips to really fast track your investing career.